So when we're looking at this daily chart, obviously we know we were pretty much bullish down here, right? I mean, there was obviously a little bit more of like some range trading going on over here, but bigger, larger perspective of all this, guys, I was bullish. We've went over the thesis however many times here. It was August 5th. Low to high on the anchor on the fibs. They created the gap. What I wanted to see to get super heavy. I told you guys I would full port this trade on an IV crush after FOMC, and that's exactly what happened. We had our opportunity after FOMC. If you guys go into smaller time frames, you take a look at the Wednesday action. It was a really nice strong close. The next following day was obviously a fade and a reversal back to the downside, and then what happened was they established a double bottom support here on the hourly, but they just couldn't give us any super clear definitive risk area until we started to see a little bit of momentum off of that spot. We didn't know that there would just be relative equal lows off the top of the gap right here to the point where, okay, yeah, you're able to just, blindly buy the top of the gap, and then obviously the continuation's coming the next following trading day. No, I didn't know that. I mean, I still had my longs, but I wanted to get super heavy and build out a really nasty trade if the signal just showed a little bit more into the bottom, right? And that's okay. It never happened, but it was still relatively heavy. I was still full size. I just was not at the size that I wanted to be at, just because I never had that sell climax into the gap. And sometimes the charts will do that. But yeah, that was the long side trade. The swing, I was willing to add contract by contract into the bottom of this gap, or basically into the swing low for a fourth lower low of accumulation building out on the daily chart. We had 1, 2, and 3. I was waiting for an undercut for the fourth, and then I would have literally full ported my Weeble into a reversion here back to the upside towards these gaps. That didn't happen. It is what it is. I have some very, very far dated Google as of right now. Those are working pretty damn well. I scooped those up right off the dip, and if you guys go into the 5, you're going to be able to see how this was a really nice recovery point to be able to size into like a swing. I thought we would get a little bit more recovery, but I'm still leaving a lot of room for this position. And the reasoning as to why is just because I feel this position could still give us a really good entry point. Obviously, we've been talking about this being the target for reversion here back to the upside off of these gaps, this bear gap that's sitting right here. And that still has not been even tested into ever since the actual gap down occurred, right? So that's still a very vulnerable long side opportunity there. Microsoft, pretty much just a pretty decent rest day. If you go over to Microsoft right here. So there's still a lot of opportunity in the market for the long side, in my opinion. This is a very two-way saturated type of rally. It's what you call a risk reversal. That risk reversal being more towards like Tesla. Obviously, a 12% move here on Tesla for this day on a major underperformer relative to the rest of the market on the recent correction. And then obviously a underperformer from a much bigger perspective over in AMD, you have absolutely ripping as well. You have some other relative strength like Meta, not so much on an intraday perspective though, more or less just a very large gap up. Obviously within Amazon, you had a little bit more strength on the intraday side of things. But as you guys can see, I mean, a lot of these had reversion targets here back to the upside with all these gaps sitting behind. Obviously, very clear risk levels involved with Amazon as well, as you guys can see, kind of just basing on top of this weekly opening gap that's sitting right around here. So there was opportunity everywhere in the market, and you don't necessarily have to use one thing as your vehicle. You could use anything you really want, any really decent looking chart. Obviously, names that have not really moved much was something like Microsoft, right? That's why I said there could still definitely be opportunity involved in some of these names, because when you look at the weekly chart, they're still sitting above a support that was failing to break down. So obviously, that could easily just be some sort of higher low entry into tomorrow. As far as everything that I was looking for today, I'm still looking at the distributive sequences going on in a lot of these names. We obviously have NVIDIA here. This is a distribution, and there's no accumulative low anywhere on this chart that tells me that things are ready to obviously move here back to the upside, right? If you guys take a look at the moving averages, technically we are curling above those as of today. I don't really care about that because I want to see an overshoot of the previous week highs. If you guys take a look at the 200 and the 50-day, everyone's talking about a death cross, and then that's whenever I said every whenever everyone talks about the death cross. I don't know if you guys remember me saying this. I said that's going to be whenever Nvidia eventually bottoms out. But the structure is just not clean enough. So I think what's going to happen is we're eventually going to pull our ways back lower if the market finds an LPSY. We go over into QQQ and we can kind of see how there could be a potential LPSY at some point. Um, on our moving averages, right? Obviously, this can overshoot the moving averages, right? So this can pull above, finally fill like the remaining gaps left behind. It could actually reclaim the 50-day or the 200-day, I'm sorry, and then pull back and then just essentially be an overshoot and fake out everyone that is trying to long this above the 200-day, right? So I'm not going to say that this is just going to be easy money off of 492. We obviously have a back test of the lower extremes of the previous ranges support here, right around 500. So around 492 to 500, which has given us about an $8 range. If you guys want to pull fibs from current swing high, current swing low, Equilibrium's actually shooting right up towards that final gap fill, all the way up here at 503.62. So if that gets up there and it shows a lot of weakness up there, that would be a fantastic short side trade if this started to really extend away from this base. Obviously, a lot of the shorts getting squeezed out because you guys got to remember this is a 1, a 2, a 3, a 4, a 5, a 6, a 7, an 8, and a 9. 9-day base here sitting off of the 618, right? So there's definitely a lot of, I should say, fuel behind this. Flows are off of the table right now just because we're past OPEX. We're in the 2-week, 3-week window after OPEX where flows are not supporting price. That does not mean that price is going to fall. It just means it doesn't have the support from options in the options market for further upside, right? So you're not going to see very, very, very aggressive, strong trends, in my opinion. I think you're going to see a little bit of, chop. You're going to see a two-way market where there's days we sell, there's days where we pick back up on the long side, right? Um, and that's basically what I'm looking for. We go over into some of these other names. Obviously, Tesla, the market leader, and I'll be kind of looking at this one in terms of like the overall market health, just for the reason that we're at a huge breakout level here on Tesla. And we're at a previous level that should have been based and it was not based, right? It's right around this general range, right? So it's obviously a weekly zone and it's a previous very large breakout range that happened. The breakout happened here through the election week, right? So if you guys go into the daily chart, you're going to be able to see how we're basically pulling into that election gap progress now, technically claimed from sellers, right? So this is a very strong day for Tesla, but you guys got to remember we're still in the territory of that election gap being held. Is a potential resistance, right? This is where we have gaps to fill to the upside up into the high 270s. Not a name I was ever really looking at short side. Obviously, it was decent looking structure over here. I figured a pop would be on the way, given the Tim Walz thing going on. Everyone probably starting to hate Tesla as far as like it's completely. There was actually a lot of people trying to buy this one last week, so I'm surprised it played out super early. Sometimes you don't really want to worry about that, but there's still a ton of targets here for the upside. The ones that I'll be watching are up towards the low 280s. So I'll be looking at the low 280s, see what the low 280s does. And then above those low 280s, if it's a harmonic volume pullback into the upper extremes of the range of where we previously accumulated from, then it's going to be a really nice opportunity. It's going to be a really nice one where if it were to get a harmonic volume pullback, maybe a little lower low sell climax, and then eventually start putting in a higher low in the daily. And that's what kind of starts the uptrend here back to the upside. That would be a fantastic opportunity, right? So there's still so much opportunity on these charts that, potentially could be bottoming out. They really could be, and this could pull all the way back up to these highs here into the high to mid 370, 300s. Um, Is that going to happen? I don't necessarily know. Basically, what we have to wait for to see is just essentially what happens on this weekly candle. I think this weekly candle and the daily candles that eventually pull us back, they're going to be very telling. One thing that I will have to say, guys, is that on any sort of dead cat bounce, you're going to get very, very, very explosive moves just because we have to revert to the mean every once in a while on both ends, from capitulation to bouncing back to the long side, and same with parabolic trends to the upside. And then you have your own example of a parabolic top or a parabolic short. It's kind of what's going on over here with Tesla. The consolidation faked me out just a little bit to be able to catch this one. I was initially all over this one on the CPI reversal. So this was Tuesday into Wednesday right here. I caught this whole entire gap up almost from the lows. So that was about a $25 long side trade for me, considering I also had TSLL, the leveraged ETF. But yeah, no go for me on this next leg up. But that's totally okay because I still think it's going to be something that's a very vulnerable trade as long as we just wait for some pullbacks and IV to cool off a little bit. Nike, whenever Nike, it's still trying to go over the shortening of the thrust type of period going on over here. It needs to reclaim the floor for this to be a confirmed support. So what it needs to do is move like butter back through the earnings gap. If it were to do that, fill the gap, and then obviously develop some sort of like weaker looking consolidation, get back above. That would be a gap risk level right around there at 72. Or you could just simply risk the level that we undercut very, very aggressively here into the report off of around 70, 75. Very, very big time volume candle here. Yes, it's a quarterly OPEX, but they marked it down. And like I talked about with Nike for the longest time, just as we talk about smaller time frame lower lows, this is a much larger time frame shortening of the thrust where you're potentially getting a 3 lower low accumulation building out here. So it's 1, technically 2, technically 3, and technically potentially the 4th climactic low here. These typically never play out in like 5. It's more like a series of 4 lows. It's kind of how a falling wedge works. It's just you have to put in a lot of time into the context of everything and how these are shaping up, and you have to really contextualize everything. This is towards COVID levels, and this is towards a very, very large pivot here, like on the monthly chart around 68.39. So basically, I'm going to be very patient with this chart. I have a little bit of exposure right now, but I bought it very early into the report on that day once I started to identify the buyer right around here. So I took some ads around here whenever the volume got pretty damn heavy on the 15 and the 5. And then I just kind of rode this one up, and then I added a little bit more when you guys are pulling swing low, swing high, right around that discounted entry. So if you guys take off the extended hours, that's your swing high, that's your swing low. Um, right around the golden pocket was what I was looking for like a high or low. So we'll see how this one behaves tomorrow. My range is still my average for the trade is still a tiny bit lower. So we'll see how that plays out. But more of my focus is going to be more on the short side with some of these names, just because I know that these do not have the strongest of lows built and bases built from the bottom ends to the point where like I know that these will eventually roll over, right? This is our previous high, right? So this is our previous high up here. We have a gap fill that extends all the way into 125. And then in confluence to that, like I said, swing low, swing high. We're looking at like equilibrium based area. So 124.10 up into 125, right? And then we have an earnings candle range that has its body left behind from above 125 all the way up to like 127, where this previous very large daily level of a pivot is sitting, right? So essentially what the larger ranges would be 124 up to 128.67. But if we were to get a straight shot all the way up into 128.67, that would probably put QQQ up towards like 503.50, or probably at least into the mid 490s, even if NVIDIA was a relatively strong name on the rally higher, which would set up, in my opinion, a 5-star short setup, given the fact that we do have an NWOG, and if we were to extend for another 2-3 trading days, and then start to really fizzle out, that would be something I would get really heavy on. Just a sector overview on everything going on. They're not selling off the risk-off sectors. I think XLE still looks really nice. Just an inside bar here today. Not necessarily an inside bar, but it's acting like one. Just really nice constructive consolidation happening at where we had a previous resistance point from. So that's a very good sign as always. Whenever you guys take a look at like your moving averages, there is a slight little chance for a pullback in my opinion. But you would like to see a high tight range formulating and just staying constructive throughout this whole entire range. Whenever you see a chart at a resistance, and it was a really nice strong mover, and then you see a lot of high tightness at that resistance, and then maybe you see one slight little sharp pullback, and that sharp pullback is some sort of undercut of anything in particular, and then it rips its way back to the upside. That's how you know that the breakout's coming. Um, so I guess we'll see with this sector. We go over to XLF. There's still a distributive looking top here on XLF. Essentially what I would be looking for here, guys, is just an overshoot of like that 50 SMA. Whenever you guys are pulling fibs from swing high, swing low, we're just right around that 618, which is in confluence to the 5040 previous distribution lower extreme support retest. I just want to see if this gets overshot tomorrow into the 618 and then loses all of these levels and rejects this previous support term resistance, right? That would be a fantastic looking chart here for the short side. And then eventually what this thing would do, it would first fill the weekly NWOG open or previous week close. Next thing it would do is probably just try to find some sort of higher low at some point on much heavier time frames, and it would start to look like a head and shoulders on the weekly chart. And that would probably bait retail into just an undercut of all this support sitting down here, fill the entirety of the gap, and then obviously that would be whenever I would probably transition really bullish in the markets if it were to do that, especially with a ton of volume towards that low. Not always going to happen in a picture perfect world like that, and I understand that. Still would never long this thing all the way up here, so I'm looking for an overshoot of that SMA into the 618, into this level, and then I want to see what that daily candle brings for us. Not anything too confusing over there, but we go over into some of these other we go over to consumers, and really no signs in the consumer sector, so I don't really give a crap about that. Healthcare, we can kind of dive over the healthcare sector if we really wanted to. I don't really care to because a lot of the equity within this sector typically moves terribly. And just as I talked about with like volume anomalies happening on charts, you guys remember whenever I took the BA swing, huge win for me on BA over here previously to whenever I found this really big volume anomaly, and I figured, this thing's eventually going to mark its way up. It's just a matter of when and where. Always look left, right? We obviously had this very imbalanced parabolic trend that price eventually need to pull back down to cover. And that's kind of whenever we started to get the volume anomalies stepping into the chart. However, we did undercut from that volume anomaly from, about 10% on the underlying. So I just want to monitor the character of price happening over here, the price action on PFE. Really big volume, guys. I mean, when you guys zoom out and you take a look at the rest of the volume, this is volume that's right around there, right? And you can see the last time we got volume somewhat similar to that was 2016. So that's very massive. And if you guys take a look at the context as to where this volume is actually coming in towards, it's coming in towards a massive level, right? This is a huge level around here that I feel like a lot of people aren't really watching, from right around here at like low 26s. If you guys pull that over, you could see how we're kind of just ever so slightly undercutting that. And we're building a path of least resistance above towards this 27 level, right? So weekly closures above that are obviously very key, as every weekly session has kind of been respecting this previous higher low loss. They've been trying to break and base beneath that. However, I don't really care to be late to this one because it could get very explosive. I just want to see if there's any sort of momentum kicker candle day. It's kind of put in, and then a high tight range off resistance, and then eventually just being able to be patient enough to wait for the absorption of the entirety of this level. And this one's going to absolutely explode to the upside, especially coming off a volume that looks like that. So that's all I'm really looking at right now in terms of opportunities here for the future. Obviously, those opportunities, like I said, they're going to show. NVIDIA short side idea, and then obviously the long side ideas being still Google. It hasn't even pushed into its NWOG yet. The top of the NWOG is what my final target would be. So there's going to be a lot of opportunity here still, and that's why I didn't really rush to any sort of trade today. I didn't rush to any sort of chart. I took one stab at QQQ puts, and I took that stab whenever things started to potentially look exhausted, and I wanted to see if it just got a weak close. That's all I wanted to see, right? I shorted the lower high right here, and I shorted this candle, and then my average is around 490. It pulled all the way down to like 489. I caught about a dollar move. And if you go over to the S&P, the divergence was just a little bit different. Current day low, current day high, equilibrium base. That's whenever I started to find the rip off of that, and this just start to base, and it didn't have enough supply to fully press things lower and reverse this thing a little bit for today. Then that's whenever I just don't care to hold that thing. So whenever I saw this candle over here pop back up into my entry, and then I was like, okay, I'm cutting, and then I cut. Puny loss technically for like the spreads, but yeah, that's why said I was very specific with everything being like, okay, I don't necessarily know if these things are ready yet. I'm okay taking a stab on this just because I closed out the April 17th longs for 100% win this morning. Um, Still have other positions working for me, like the BABA short that I have extending into the summer, and I still have a little bit of Aprils left on BABA. Um, I took these on this day. So that was a really nice win over there for me, and I'm still looking at the April or the summer expiration for targets that remain here to the downside towards like right here at 132.50. We have another one down here at 130 psych. We have the earnings candle low area. Just those general areas I think need to be taken before we see further upside on this one for the time being. So that's essentially a $15 fade on a highly volatile name if I were to be able to get that. So, and I executed off the earnings candle high right around here. So actually above the orb is wherever I established risk on this day. Because that's technically the breakout, and then I use my trailing on smaller expirations here off of 144.50. You guys go into the smaller time frames, it was just a really nice consolidation here beneath that. So yeah. Um, Everything else that I've been mentioning as far as charts go, we'll take a look at the chart tab here real quick. I still hold my NVIDIA, by the way. I wanted to make that clear. I just have 3/5 size, and I'll get full size if this pushes up towards equal. I have 18 days of expiration, and I have a little bit more on another position. So I don't really care too much about seeing a little bit of drawdown. As far as whenever the market wants to roll over, relative strength here, yes. Is the volume crazy? No. Obviously, this was just a sign of seller exhaustion from the rollover because that happened in such a high velocity type of manner here with a 28% pullback in 3 trading sessions. So that's pretty crazy. But at the end of the day, this is a very volatile name, right? So whenever things are pulling back and they're reverting back to the upside, you want to see how price kind of respects those areas of like the previous gaps left behind, the breakaway gaps whenever they sold off, just so you can see the true intention behind a sell-off that looks like this. Because if they just pull it back up and then like they absorb the entirety of the gap and then they pull it lower, they base it, and then it continues its way to the upside, it's likely going to go to this gap, or it's likely going to see new highs, and this whole entire range is kind of just your preliminary supply, right? But if they want to fully commit to the range on where they sold from, they'll defend the earnings range progress, right? So they sold price through the entirety of the earnings gap, technically starting on this day right here, Monday, February 24th. So that's where you would typically, that's a progress candle from sellers. You would like to see the gap or that high a day, or there's just that general area being defended from a seller. And then that would obviously be like a valid discounted range here where it's breaking out of the consolidation, it's pushing into equilibrium. The volume isn't anything too crazy. It's actually a little bit heavier here to the downside on these days. Um, so yeah, we'll see what goes on here with PLTR. I'm going to have you guys could already see that I have alerts set right around here into around $100. So I'm going to keep that on my watch list here. PDD is a China name that I might be looking at an options trade. I told you guys I'm looking at high tight consolidation here on PDD. We have a double inside bar on a really bullish looking earnings candle, and we filled the entirety of this gap down here. This is why I got long shares last week. The spreads were too bad right off of the rip to get long options. So I got long shares. This is also a really nice confluence of the 200 SMA, and we have gap fill targets here to the upside that extend all the way up into the 150s. Really nice looking base beneath us throughout most of this range, right? And then higher lows subsequently to that. We filled a lot of the gaps, or at least pulled into a decent bit of those gaps. Like there's one right here. So I figured that this would be like the LPS, the catalyzing type of event within this gap and with on top of that 200 SMA. That told me they absorbed the entirety of the bear gap above. You guys got to remember, they traded this well over 70% through that gap. And then they just based it. They marked it down. And then they opened it back above the bottom of the gap's level, right? So if you guys take a look at simply just the bottom of the gap, that's what I do whenever I am coming into the trading session. I just mark the areas where I could see some true direction off of, and you could see how much lower they really pushed this thing beneath the gap. But at the end of the day, they recovered it into the open, which I really liked, and they opened it above the gap, right? And then they were kind enough to give us the retest, and that's where I filled my shares, right around here. So that was a really, really nice win. I still hold on to just a little bit of those, about a half. I was really heavy on this because I was really confident. And that was a 10% move technically from the low a day. If you got a worse fill, or if you got like on the opening print, 7%. Wasn't, like I said, wasn't ready for any sort of options trade there just because the spreads were too bad off the open. Didn't want to get caught in any sort of like weird P&L drawdown just because of spreads. So I guess we'll see what happens as the moving averages get a little bit tighter here on this chart. Really nice undercut followed by a rally, and now potentially a 3-4 inside bar base above those moving averages with a breakout level up here into the progress range of 130, 132. And then we have a slightly, ever so slightly unfilled gap here at 136. If you guys remove that and you look at the much bigger perspective of risk to reward, that is tying in here on this commons trade. I mean, if we get above this level, that would be potentially a trailing for me, right? And then we obviously have room all the way to the upside towards that gap, right? And I mean, if you're looking at commons here, commons by themselves is a 20% win, right? And if you could put a lot of money in that because the commons. Obviously, HSI futures was the thesis that I was looking for with BABA in terms of just, the 3 higher high climactic top into the 618. Essentially, all this was swing high, swing low, a lack of a retest on this breakout level. This actually looks a little bit different from my other HSI chart. Here's a better one. So big time breakout, 618, 3 higher high distribution going on over here. And that's what I was kind of tying in confluence whenever I explained to you guys about the BABA UTAD, right? I mean, this is 2 inside bars. It's also 2 inside bars on a breakout the entire world was watching with a distributive character to the earnings candle. I mean, this is a neutral spread candle. If you guys go into the hourly time frame on the actual earnings day itself, you could see how it was actually a very nice markup. And then throughout the beginning area of the intraday session, things got a little bit sketchy. They got a little bit shady over here, right? I mean, this is a very large wick, ton of volume right off of the open. And then obviously the continuation subsequently to that day was nothing even remotely close to strong, right? So we got a 10% gap down, pretty heavy volume. And then ever since that, what we did was we just kept, making new lows beneath the previous lows. We filled the entirety of this gap almost here from the earnings itself. And now we were pressing up against a lot of this chart had a distributive looking type of vibe to it, given the gap down here and the very big, large volume into the session of earnings, right? Which actually had a relatively bearish close. And then everyone thought this was going to be some sort of absurd breakout. Nah, no absurd breakout going on over there, man. Really nice breakout here on this day, which got everyone bowled up. The following action after was not healthy. I mean, you're looking at a previous resistance, you're looking at the break beneath, you're looking at zero trading action here or here, right? That's why I said, doesn't really look like the cleanest of UTADs, but you have to contextualize as to where we actually are. If you guys go to the daily chart, I mean, you could see over here how the daily chart actually, geez, man, the daily chart had a very large gap here that technically starts at 145.30. If you're taking the actual open of the next following day, you guys go over and you take a look at where that was tying in nicely with BABA from. That was tying in very nicely, technically, with the failure to close above, right? And then this was the breakout failure candle itself, which technically took us beneath this, right? So with that being said, we'll see how BABA behaves. And I think if this one gets a really weak pop, and Chinese futures obviously don't look bullish anymore off of that 618 area, and this gets really weak maybe within this gap. If it keeps extending to the downside, I'll just ride the wave on the position that I took and just keep on making more and more on it. If not, and I did open a position on Friday on this one as well, just as a profit roll, not anything too crazy. Already did really well in the gap down, and I'm still holding some of those positions for like end of April. If this were to get a weaker looking pop, everyone's going to get bowled up again, and it's not going to work out well. Whether it gets really strong down here and then fizzles out towards the highs into the gap and gets a true UTAD, it's not going to be looking good anymore. I already don't think it looks good anymore. And we have a major lack of retests off of the breakout, right? Still a bullish looking chart overall, guys. It's just we're talking shorter time frame stuff here. We're not talking about, oh, well, the weekly, did you see the weekly, bro? No. We're looking at weekly consolidation that had the breakout being a wick. We're not looking at, oh, well, this is a massive distribution like TSM and this is going to die. No. We don't really have a lot of those ranges to be dealt with right now. No true accumulation, no true distribution other than like obviously some of the commodity related stocks. We obviously had some of these defensives pulling into gaps that looked decent. Nothing really too great, nothing good enough, no sort of criteria good enough for me to be able to take a trade on these ones. The last really confident trade that I had was NVIDIA, and they're giving us the opportunity once again, in my opinion. The previous trade that we took on NVIDIA was, what was it? It was Thursday into Friday's wick. So yes, much smaller time frame stuff going on here with my work here. I believe I took this one on the rejection of this little gap. And once it rejected that area and it couldn't make a new high, and the NASDAQ looked like it wanted to reverse off of this resistance just because everything was really dying out up into here volume-wise. that's whenever I really wanted to short Nvidia, right? And then I got pretty damn heavy on this one from like about 120-ish down into like 115. So it was like a $4.50 fade. Not anything too crazy, but yet again, opportunity just is getting better on these pops, on these gap ups, where the afternoon looks exhaustive, the close is actually bearish, the opening was really not strong. There was actually a large amount of volume off of the opening that pulled us down and actually showed Nvidia to be a relatively. That's why I had a little bit of a premature entry today, but I don't really care because, like I said, I left like size for me to be able to almost triple down on. And with NWOG weeks, guys, I never successfully kill it on like a Monday unless I'm looking for like a really clean gap and go type of setup. Whenever indexes are popping up like this and there's no clear valid risk levels, you either have to be long last week or you have to look through the equity market and be able to decipher kind of like where a solid risk level is on something that's opening up. And did you see any? Because like I saw some, but like I saw very few. Like I saw Tesla, I kind of wanted to take today, but I held off, and I probably shouldn't have held off. We had a slight little, we had the election earnings gap here, right? Um, I'm sorry, the earnings gap and the election gap. We reclaimed the election gap and a resistance from last week into the open, right? And then we filled some other minor little gaps in the confines of this previous sell-off as well, right? So when you're looking at the 15, I mean, I could have taken calls somewhere around the claim of this gap and the fill of it. It just felt uncomfortable, right? I mean, it just ultimately felt uncomfortable. I mean, we're chasing a 6% move to the upside. Have you been noticing QQQ and SPY divergence, or am I smoked? Yeah, I have. I don't know exactly what's super telling about that. As far as like the differences between the S&P and SPY is essentially just that we're not deviating so far away from the lower extremes of the distributions retest on the NASDAQ as we are to QQQ, which I wanted you guys to keep in mind here as well. We're essentially retesting the lower extremes of the distribution. We are filling a gap probably tomorrow, and we're retesting the January lows tomorrow. That's why I wanted to get just a little bit of a position going. I didn't. This is why, because I can snowball my position to the point where like I'm pretty heavy with a solid average. I've done this before. I've been here. I do it a lot, right? And I feel like other people, whenever I am in a trade where I said, you know, this does have room back to the upside, and then they buy it, and then they stop out for minus 14%, and then it goes minus 18%, and then it does a straight shot to like 70%. It's like, bro, you're taking paper cuts that you can't even accept. Like, just wait for your fucking trade plan, or like just don't trade it. Like, it's that simple. Like, just wait. You know what I mean? So that's totally up to you guys as of right now. I'm just going to tell you what I'm doing, and if it sees a little bit of drawdown, just know that I warned you that I accept that it has drawdown. My April longs from over here that I talked about, they had drawdown. They had a lot of drawdown, but I was very confident in everything going on. Not a lot of drawdown. What am I saying? They had probably 15% drawdown. Whoop-de-doo. But, you know, people get emotional, right? So yeah, there is a divergence. Thank you for pointing that out here, Dom. The S&P has a less of a deviation away from the lower extremes retest, right? Where the break of structure technically happened at here on the daily chart. So, you know, we were going from August 5th to higher low to higher low to higher low. Now potentially breaking through those higher lows, going to lower highs. It's very, very simple things going on here, and we still have targets in mind here for the downside. We left behind a bull gap, obviously, as we know. But we are in a window of weakness, although like the S&P futures, I'm not a futures guy, but like they are reclaiming like supports and whatnot. And so this is a very all I'm really going to say and conclude with the call is that this is just a very important area of price action going on here, where like I feel when the signs are very clear is like on an intraday scale is whenever everything will be like super easy to like decipher what's going on. Like nothing was super clear in the indexes here today. And like, okay, you could have took a slight starter at the close just for insurance on if this thing were to gap down, or you could just say, fuck it, I'm gonna take a little bit of risk on the other end of things and not have a position and just wait for my levels to get retested. But if you're taking a position, taking a starter, and it's a almost like an insurance type of starter, meaning like to the point where you don't really want to like miss the move, but like you also don't want to like deal with drawdown. Then like if you can't deal with the drawdown, I would just kind of close it and just wait off a little bit. Swing trading has just not been very easy in this market. Obviously, we have some of those emerging leaders coming off of like a cumulative basis, potential emerging leaders. We obviously had Bill Ackman buying a stake in Uber. Really nice looking chart here. Really a really bullish looking leg here to the upside. Strong, healthy candle spreads behind those candles, right? And now we're trying to put in some sort of higher low here on the weekly time frame on a really nice pullback of harmonic volume retracements here. I think the chart looks pretty damn good. Um, do I think it's something that you should, believe in to the point where like, you could lose a lot of money on something like this? No. Um, but is there decent looking risk levels to play with? Yeah. I mean, we reclaimed our moving averages yesterday, and then we had a really nice strong day off of that. But at the same time, guys, like you kind of have to be lining up your long side ideas and your bullish looking charts with like your overall market knowledge, because like you guys, I'm sure you understand the thesis that I had behind being a bull whenever everything started to base out here. Overall, whenever I was like starting to lean more on the bullish side, I'm sure you guys understood like the thesis. But like, look at the indexes chart, okay? And then go over and take a look at like the Tesla chart. Like at least this Tesla chart has like much more reliable risk levels to kind of play off of in terms of smaller time frames, higher time frames, and whatnot. Like you could have been accumulating Tesla longs above this gap that was undercut, reclaimed, 2-day base, and then a strong day off of that. If you guys go into the hourly, I mean, you had some opportunities to scale into momentum with Tesla here on these bases or on like the previous day high reclaims whenever like it got reclaimed on like decent looking volume. Those have more reliable risk levels in my opinion than indexes, especially if you're like an emotional trader. If you're emotional, you kind of have to like make yourself less emotional by taking the chart that like you feel more comfortable with, if that makes sense. um, Even things like Google had really nice looking risk levels here to play off of as well. We got a really nice candle closure above this previous level. But if you guys simply look at this just being a daily wick, and then you take swing high, swing low on this daily wick because you look at that wick and you're like, oh my gosh, okay, that was a major shakeout candle. You just look at higher lows subsequently to that because they traded it through the entirety of the candle. They absorbed everything. We're still deviating away from that NWOG here from March 7th and March 10th, right? And we never had price pulling back into that. So this calls for a really nice reversion trade here back to the upside. You could buy the equilibrium, start incrementally scaling in off of, and then see how those daily candle closures happen. And then obviously evaluate your position from there and have time. Don't have a ton of volatility behind a position right now in a market like this. And you could have a position already locked in off of, down here in the averages of like 162 to 160. You're up 6, 7 deltas already on that, and the NWOG hasn't even been tested yet. You could be looking at a $13 move to the upside that you caught with ease, right? So, it's always important to just make your job easier based off of kind of knowing who you are as a person. And that's why I feel like a lot of people didn't really catch the. I know a couple of my buddies caught like the QQQ long and like the S&P long, whatever you wanted to do. But like if you didn't, just understand that next time is who you are as a person. Like if it didn't look right to you, if it didn't feel right, look at some of these other charts in the equity market that feel right and get some decent averages on those, and those could be fantastic. Like Yusuf took AMD. I mean, this is a really, really nice looking chart here on smart time frames. I disregarded it a little bit just because I have a little bit of a short side bias on Nvidia, which is totally okay to me. I thought this chart looked good. It's just I didn't really want to deal with like trying to bottom tick AMD. So this is a fantastic looking chart that had an exhaustive bottom. It had a really nice strong pop with a ton of volume. It pulls into those gaps. Keep in mind this is Wednesday. This is the FOMC day. You had opportunities around Thursday. You had opportunities around the reclaim of the moving averages. You had opportunities around Wednesday, technically, on this wick to the downside that was sitting within this gap. To be able to build out a position, like I said, with a ton of time behind it. Because you guys got to remember, a ton of time can still pay in one given random day. Like, you guys think like you need to catch this crazy vertical move to the upside to get any sort of large win. No, go take a look at the AMD options chain for summer, for the end of summer. Go look at August's for AMD. I bet you those ran pretty damn solid today. And with us obviously looking at that reversion here brought to us by Jerome Powell, you could start sizing into the snapback rally in a sell in the midst of a market sell. It's very, very volatile. It's very good, right? So that's all I really wanted to clarify. Yeah, so like AMD 125 calls, AMD 130 calls for September of this year, September 19th, up 43% today. So you guys don't need to trade super short or dated. I mean, July calls for AMD, up 70% today, right? You start building out a massive, massive position. You go over here. Guys, you can make your quarter off of sizing in at 103. So that's all I really want to say as of right now. There ain't really much more to talk about other than looking at the redistribution potential here with the NWOG. Just waiting and seeing how price curls up or finds a high velocity sell off of these ranges that we've been looking at for reversion targets. Is it going to be very fast? Is it going to be very violent? Is it going to be like a simmered down type of move that could be caught by a higher low at some point? Or is it going to be absorbed the next following day? And are we going to get one sell period day kind of going on, and then they snap back with moving up the bid so aggressively to the point where they reclaim these levels that we're talking about right now, right? And then they just start pushing it way back higher to the upside. It's really hard to say. I'm not bullish really on the market this year. I don't think the market's going to do nearly what it did last year. I don't think that we have really been in any sort of circumstances to be able to say that we can't see new highs. I'm just saying into those new highs, I don't think we're going to be. I think we're going to be. You're going to have to really learn how to be a two-sided trader here for most of the year. This big higher time frame level, this big higher time frame breakout spot off of like around 565, as well as the weekly 50, are both sitting in similar areas right around here. This was my initial Q1 price target from whenever I was bearish all the way up here into like the 600s. And that's also tying in really nice. So if the NWOG fills, I want to see if they can hold this general range that was a previous breakout, right? So this, like, I mean, you're going to have to be very patient with a range like this, but it's basically right around here. And as you guys can see, that ties in really nicely with the NWOG, right? So if we were to get the redistribution and say it extends a little bit higher, and that's okay. I'll stop out on my positions and I'll re-enter them with even more conviction if that kept going on. Um, but just say we reject, right? And then we pull our ways back lower, and then we just get a fat buyer and a fat trend day, or just really nice consolidation around here, then it would probably just be like a two-sided market, like I said, where, you're consolidating, you're holding previous levels that need to be reclaimed, you're popping back higher, you're filling more gaps here to the upside, then you're, maybe redistributing a little bit lower. Like, it could get really choppy is all I'm really trying to say. So, I think new highs. I think if we go like quantitative easing route, I think that everything is going to easily see those new highs. Do I think it's going to happen with ease? No, that's my point. This is not going to be any sort of like, super volatile move here back to the upside that has so much lack of supply. It's not even funny. I don't think it's going to be like that at all. I think it's going to be quite difficult. So I'm a two-sided trader here for the time being. As far as other rotations go, we obviously have the defensives here in very large breakouts that can obviously start showing off immense strength, and we have to wait for those. Those being over into like Chevron, right? Like we just had a very large breakout within Chevron. Is the market pricing in something that we don't really know about, where they want to start looking towards the names that have more cash, looking at the names that are more towards that like recessionary type of like protection? I don't know. But all I know is that these are breaking out. They're seeing really nice, strong momentum. I mean, this is on a very, very relatively strong move here relative to the rest of the market. Obviously, ZOM was a swing trade that we had that hit for like 70% at highs. This is a fantastic looking chart here still. And are these going to get healthy looking rest, or are those going to redistribute off of like a lower high? I don't know yet. But as of right now, everything looks relatively healthy. These have now reclaimed their 200-day, their 50 days. They're above both. And those look fantastic. We go over into like crude. Crude's taking a bounce off of support. We go over into the oil fund. This is taking a bounce off of like a previous reaccumulation range, right? The TA is kind of hard to do on these names, but yeah, I don't know. I'm just really interested in terms of sector by sector. I think XLE just stands out the most to me. I don't know about you guys, but to me, it's kind of going down the route of like XLV or XLE. Obviously, we have the illiquid sectors showing off really nice, strong signs here as we move forward. Essentially, what this did here was it undercut a previous low. As I talk about, guys, all these always either follow the market or they front run the market. Typically within a distribution, they front run the market. If they follow the market, um, it is what it is, but the signs are always going to be there in terms of like contextualizing as to where we actually are on those charts. Toll Brothers is another really nice one as a decent market gauge. As you guys can see on Toll Brothers, we had a very large bull gap here to the downside. We filled that. This is also a previous resistance. So a really nice area on the chart to start thinking about this, finding a relief bounce, right? But as we talked about in terms of like distribution on these, I mean, this was distributing very aggressively throughout the window of December, and then obviously retesting its break of structure right here from the previous higher lows into now lower highs throughout the end of January, right? We go over to the end of January, and the market wasn't even anywhere near topped yet. Actually, similar structure to what we just talked about with Toll Brothers can be the potential with indexes. This is a little bit more volatile and it's way less liquid than anything like the indexes, but we go over to the indexes and you can see how like these are now just retesting their previous higher lows, right? Toll Brothers, previous higher lows being retested here and previous weekly levels being failed, right? Is there an options chain on this that's like anything decent if anyone knows? I would have traded this and probably hit a massive trade if I actually took the time to go look at the options, but I think I just automatically assumed the options were terrible. Oh, they're horrible. Even the April 17ths aren't good. They're not horrible though. There's just absolutely no volume traded on any of these or open interest. But I mean, guys, these contracts, they went from these went like 400% on a swing, or 700% on a swing, I think. And I actively was talking about everything going on here. It was actually pretty crazy. I'm a buy trader right now. It sucks. It is what it is, but this is where, things become a little bit more difficult, and this is where if you guys really put in the work and you really pay attention to everything going on in the market, you can definitely destroy the next distribution followed by the correction. The schematics don't always play out in the same way, but very similar concepts always play out. Obviously, this is something like a vol event, so that's like a very, very big anomaly for the market. But as you guys could see, I mean, there wasn't the most bullish look over here on this day, on this bottom, on this end of this previous distribution. There wasn't the most bullish look on this low over here. What they did was they undercut previous supports, they reclaimed those, and then everyone got squeezed out of the market on very easy rallies here back to the upside. The only difference is you contextualize as to what this is happening on over here. Vanna Charm get really strong into November. End of year flows, the holiday flows, as we like to call. They're all being kind of like the Santa rally it's always front ran because the actual strong flows where there's less volume weighted time, where there's less volume traded in the general market, you get very easy moves to the upside. That's why these opportunities previously, all the way back here in 2023, were fantastic, especially with the distribution leading up to that point throughout the end of October. So yeah, I mean, these were really fantastic opportunities over here, guys. But you guys also got to remember, not always do targets get hit that make total sense. I mean, this is a previous back test of a breakout level, and this is a entirety of a gap fill. It never pulled into that. So you don't always want to think of things as a picture perfect world, but if they aren't in that picture perfect world, you might want to wait, right? You might just want to wait a little bit, not front run much of anything. I'm front running a little bit right now, but I'm okay accepting that risk. But I think there'll be opportunity for everyone, even if I get a little ahead with, like, let's just say a sell-off in the morning. You don't really want to be shorting into the NWOG anyway. You kind of want to trade things above the NWOG for a draw back into that gap. And you want to find the signs of exhaustion or distribution playing out from the top end of the range rather than like the midpoint of the range or the bottom of the range. That would be the worst spot. Kind of same goes for like the distributions throughout these pops that were shortable pops. Everyone thought this was some sort of like bear flag. No, not a bear flag. That's just not a bear flag at all. That's very heavy volume with no new low being able to be made beneath the very heavy volume low. You guys got to remember, within a sell-off period that looks something like this, it's not always going to be just full-on out buyers. There could be a very large participant that's playing passively within that little tiny wick, right? So, yeah, that was the whole long side thesis, guys. This gap up, it's not of any sort of strong, impressive action, in my opinion. This is just simple reversion in a market where we left behind a lot of imbalances from the previous leg lower. Like this right here, no true strong back test. We have another one all the way up here into 583. So we'll see what goes on. I don't think trading this is going to be super easy, but if we do start developing structure that tells me that the market's going to really start to see some upside momentum, a lot of these names are going to give off so much opportunity to the point where, yes, AMD popped 7% today, but this is just the very, very beginning. If this thing wanted to climb all the way back up to new highs, like the indexes I'm talking about, which there is a possibility of that happening. Actually, Chem actually thinks that could be happening. So, yeah, that's it. That's all I really have. PFE, swing trade watch, 27 path of least resistance. Google reversion here back to the upside, as well as Microsoft with a clean rest day. I talked about the short side opportunity here on if we wanted to see some sort of weak looking action on Netflix, but all this really did was go green, red, back to green. So I don't have any true interest. It could have been a decent day trade off of this resistance being a breakout failure for the time being, followed by a retracement and then a lower high. And then it obviously just pushed down into, if you guys take a look at the earnings candle, it claimed that, held this base, and then successfully closed its daily candle back above. And closes are more important than openings for me. So we'll see what goes on in this gap and the gap fill, but I'm more interested towards like the PLTR side of things, and maybe also Robinhood. This is also similar structure to that Palantir, whatever you call it. And this is pulling its way back into a discounted range where it's a very, very big line in the sand, just as overall structure goes. But I think with a lot of these extending away here from the previous consolidations and the volume dying out, I can't see how there wouldn't be any sort of lower high shortable pop. So I'm sitting very tightly, just waiting for that, waiting for the previous week highs to be taken on Nvidia, looking at the equilibrium based area on Nvidia. And obviously this can call for like a really nice short side opportunity to take out essentially all of the areas is where we never had the accumulative low. So it would have to pull into these gaps to collect that inventory to then have the fuel to push its way higher if the upper ranges got exhausted into here, into this general range, right? So that's all I'm looking at. If you guys have any questions, you can DM me about this. I'm going to upload everything, but have a good night, everyone.